Here we go, folks. To the seniors, to the juniors, is this happens to be a $570 call on Google. And Google, along with the markets, are down another 6.77. Today is Friday. Today's date is 3/11/2011. How about that? 11/11. The good thing about it is there's a reason for it. The time is 7:47 a.m. Pacific Standard Time, and the reason for it is that Google's going to get to a very oversold condition, and we have a triple witch that starts in the next 5-day period on Monday. The call side of the market, these were well above $30 5 days ago. You can see where the current call down around $10.50 is. That means that we're getting to what we call the SMF wholesale bid, meaning that the public has been washed out in these calls that expire. It's a March call that was in the money. When Google reversed, they lost all their premium in the premium price down to wholesale levels. The other thing that we're going to be showing is we're going to show you that 570 call. We do like the 580 call too. It's in the same category at a lower price. And there's still a nice trade in the 580 here. There's going to be a very nice trade in the 570 call. That's this one right here. That's the chart right here. This 580 is right over here. And the 580 is also deflated just as that 570 in the current money. And we're very close. Well, below the 580 strike here. And in this one here, we're above the 570. We're at 574. We just put a low in and bounced a little bit. And the high of the closing bell was 1509 on the contracts. The high for today was 1456. What SMF MMTs like to do is get deflated when the equity is ready to make a move now in the index. When the NASDAQ comp wants to turn around and this is going to run up in price, these will go higher and these will go higher. And as you can see, 1030 is a low, 1080 by 1090, 1070, and these are wholesale bids. Okay? The other thing we're going to be looking at is I will throw in the 580 chart as well. And we'll take a look at the deflated 580 call for right here. It's the very same type. Remember that you're $6 below the strike price here. And you can clearly see here where the high was a number of days ago. So you take today, 1 day, 2 days, 3 days, 4 days, 5 days, you are above $20 a contract. When you're a wholesale market maker and you're buying down at the lows because you knew that the index formulas said that we're hitting a certain area and that triple witch next week make these wholesale entries equal less risk. Dollar cost risk is minimized substantially by buying at the right time down in the wholesale bid versus the retail owner from $40 a contract have ridden them down to $5.50 and now hoping that they get back to even, and I hope that they do. But while they're getting back to even, I want to be the buyer so that it goes up in value because I'm very deflated and I need to start my purchasing today, even though it's going into a weekend, because that triple witch is going to be on Monday, and it's going to be the wildest put and call ratio expiration on 2011 calendar. January 1 and February have gone by. I can tell you that March one is going to be something. And that means that all of these things are going to come down to deflated prices, and then that's when we'll start putting the bottoms in Google, and then when Google trades up, these will go with it. They make money. I didn't say you had to get in right now, MMTs, but this is going to get wholesale. And we're going to let the day go out, and we're going to watch Google along with, let us not forget on this Google special, let us not forget that the Dow is selling off right now. I need to put it out in all points bulletin that we do have a sell program hitting the bell. And there it is. I'm going to pull up the Google chart so that people can be, and this is that call contract right here. See it? 580. And it's very cheap. Let me bring up the Google chart. Just give me one moment. Here we are. This is the SMF platform. Let me move that over here for you MMTs. What I would like to show you is that we got down to a certain delta range right here, minus almost one full delta. And one delta down today on Google, well, sorry, 573.13. The low was 573.33, between one full delta negative. And you're starting to get that bounce. You're starting to get up to 25. You got to go north to 35. You got to hold this half bar action down there. If we do bounce, it's got to go much further, and you got to build off of that bottom, and it would be time to buy the call contract for a low risk entry and a low risk exit based on the fact that this has got to stay well above 25, and this 0.78 has got to run rampant in the other direction, and you'll blow out in price. Right now, every low has failed. The time is 7:53 a.m. We're on the 570 call and the 580 call in the money on the pricing option for the triple witch the following week after the weekend on Monday.